Hello everyone. I hope this message finds you and your beloved ones in good health and spirits. These are extremely challenging and trying times, the likes of which we have not seen before. The COVID-19 pandemic has already caused immense human suffering and triggered many economic consequences that will only become apparent later on. As you all know, the second quarter of 2020 started with society in lockdown. And even though society has gradually reopened at the start of the summer, it is clear that there is a significant economic impact, especially in certain sectors, and it's clear too that the further course of this crisis is hard to predict. However, the various relief measures implemented may help contain the overall impact going forward. Obviously, the long-term impact on the economy also depends on the occurrence and intensity of new outbreaks of the virus now and in the coming months. Since the start of the coronavirus crisis, we have been working hard with government agencies in our different core markets to support all customers impacted by the coronavirus by efficiently instituting relief measures, including loan repayment holidays, and adapting or extending these measures where necessary. In these difficult times, we also have managed to continue providing our customers in all our core countries with a high level of service, thanks in the main to the efforts and investments we have made in relation to digital apps and services over the past few years, but also thanks to the expertise and commitment of our employees in our branches and call centers. Meanwhile, we continue to work hard on solutions to proactively make life easier for our customers. The interaction between human and machine, between branch and digital app, supported by artificial intelligence and data analysis, plays a prominent role here. We believe that the world emerging from the coronavirus crisis must be a more sustainable one, and we are working tirelessly to contribute to such a scenario. With that in mind, we successfully launched our second green bond in June for an amount of 500 million euros. By issuing green bonds, we aim to create a closer link with socially responsible investors, to provide finance to customers directly involved in sustainable projects, and to contribute to the development of a liquid and efficient green bond market, which would finance the transition to a low-carbon economy. If you look at our financial results in the second quarter of 2020, our commercial bank insurance franchises in our core markets turned in a good performance, generating a net profit of 210 million euros. However, the result was significantly impacted by the booking of 845 million euros in loan loss impairments, the bulk of which related to the potential economic consequences of the coronavirus crisis. In this regard, we wish to reiterate our guidance for full year 2020, i.e. a base scenario of an estimated 1.1 billion euros in loan loss impairment charges. In the second quarter, lending to customers increased by 4% year-on-year, and deposits including debt certificates were also up by 7%. As expected, net interest income and net fee and commission income fell in the second quarter. The non-life insurance result, on the other hand, was very solid, with good sales and a strong technical result. Life insurance too saw strong sales in the second quarter. What's more, our trading and fair value result, which had been hit very hard during the first quarter of the year, recovered to a large extent in the quarter under review. Our strict cost control measures, together with the additional cost savings announced when the first quarter results were published, helped reduce our operating expenses, excluding bank taxes, by 6% quarter-on-quarter and by 8% year-on-year. Our solvency position remained very strong, with a common equity ratio of 16.6% on a fully loaded basis, well above the current minimum capital requirement of 7.95%. Our liquidity position remains solid too. Given the situation, our current capital and liquidity buffers allow us to to face today's challenges with confidence. I also wish to add that, contrary to our general policy, but in line with recent ECB recommendations, we will not be paying an interim dividend in November 2020. In closing, I would like to take this opportunity to explicitly thank all those stakeholders who have continued to put their trust in us. I can assure you that we remain fully committed in these challenging times to maintaining our position as the reference in bank assurance in all our core markets. All that remains for me now is to wish all of you a safe and healthy summer.